here from LAGFX, back with another Sunday Sessions video. If you don't know what these types of videos are, it's basically where me and James go through the markets over the weekend while the market is closed, analyze the markets and give you our rundown and our bias for the week coming. This is a great way to, one, learn from how we trade and also give you an edge for the coming week, giving you opportunities to maybe look to place positions or broaden your Forex knowledge. So what we're going to do is go through 3 pairs today, and then I'm going to pass you over to James, our head analyst, and he's going to run through some of the pairs that he is looking to capitalize on and some of the analysis that he has got for you today. So first and foremost, we're going to go through AUD USD. Now, just looking here straight from the bat, we can see how I have highlighted our weekly high. So our weekly swing high, our weekly swing low. Now, obviously, looking at the 1 week time frame, we know that this market is bearish, predominantly bearish for the higher time frame structure. So realistically, we want to be looking for those sell positions, as we always want to trade with the trend and not against it. With that overall bias and that overall direction laid out, those foundations put in place, we obviously believe that price is going to take legs lower. Now, in order to do that, we're going to have to see some kind of market flow. Structural laws will be implemented within these markets. So we need to see some kind of retracement, and that, if anything, enables us to get more refined entries. So after some lovely bullish momentum, the market then introduced what we like to call a distribution, this whole phase here. Then we had a break of structure, and we have since seen lovely bearish structure being delivered into the market. Now, this candlestick pattern and formation that has been created can also be seen as a head and shoulders. So if we look at this, we have a shoulder here, our head, which always comes higher than the first shoulder. And then we have our second shoulder, which always comes lower than the head or the previous peak. This is obviously early signs of a reversal and a potential move lower. We then get our confirmation of this once we have a break in this neckline, which is our initial break of structure. So here we have a low set. So this low should be protected. So realistically, if we were to look at bullish structure, this would be the impulse, this would be the retracement, and then we'd have a new impulse taking us higher than this one. As we know, the highs break, the lows don't. And then when price comes back down, it shouldn't break this low, as the lows are actually protected. And then it should take us higher, creating a new higher high. Obviously, that is not what we have seen. Instead, we have actually seen a break in this protected low, which then confirms further bearishness. Now, realistically, we could have got in on the retracement here. So we could have waited for the retracement to take place like it has done, then gone down on time frames and looked for some kind of confirmation by looking at fractal structure for a reversal taking us lower, and then we could have actually taken full advantage of this first impulse. Obviously, we didn't do that, and this was an opportunity missed, but we are going back to the summer of 2021 here. Now, as we've seen, a lower high was created, confirming further bearishness again. This lower high was confirmed once we had a break in this low here. This confirmed a lower high that was created. Then we have seen price come up, come down, actually breaking this low that was created here. And then we have seen price come up, setting another high. Now, people will think, this to me is actually a break of structure to the upside. So price is now looking to go bullish, because this low has been broken, and so is this low. Now, people will be led to believe that from this fractal break of structure, we are now going to see further bullishness take place. Obviously, that's wrong, because when we look at this, yes, don't get me wrong, this is a break of structure to the upside, and we've had further confirmation of that here. But if we look at it in a larger scheme sense of things, we can see how it is still actually following bearish structure. So if you just memorize this, let me just get rid of it just so I can show you exactly what I mean. If we look at this in a higher time frame sense of things, you'll see that it is actually still following bearish structure. So if we start from here, we have an impulse taking us up, a high created, then we have a low created, price taking us up, a high created, and then price coming down, breaking this previous low here, creating a lower low. Then we have price come to create a lower high, and now we have seen price come to create a lower low, breaking this lower low here, confirming further bearishness. Now looking at the pattern that I have drawn out here using the blue pen, we can see how this is actually an extreme high, head and shoulders. Well, that's what it looks like to me anyway. We have our shoulder here, the head which comes higher than the first shoulder, and then we have the second shoulder which comes lower than the head. We have now seen price break this neckline that has been created. This confirms this head and shoulder pattern. So this suggests to me that price is in fact ready to now take those lows, and hopefully we will see this low here being broken. So this obviously confirms my overall bias, the bias to sell into this market. So we want to look for those sell positions. So not only have we been able to distinguish a lower time frame head and shoulders, but we've also been able to distinguish a higher time frame head and shoulders. So it confirms those higher time frame biases to sell and those lower time frame biases to sell into this market. This, if anything, is going to encourage those sellers to be active in this market. So now completely zooming into the market and looking at this on the 30-minute time frame, we can see how we've had a break of structure to the upside. So we know that price is in fact bullish at the moment. So we don't actually want to be looking for sell positions just yet. We want to find areas at which price could come to in order to reverse and then look for those sell positions. So as you can see, I've highlighted 3 areas. These are 3 points of interest that I have found over the course of doing my analysis. And these are areas that I believe price could tap into before taking us lower. Now, just using this first one here as an example, I would love to see price actually trail up. So continue this bullishness, tapping into our POI, showing some signs of weakness and a break of structure to the downside, which would be produced by a break of structure, and then seeing the markets basically take us lower. As I say, I'm wanting to see price break higher time frame structure and actually take us a lot lower. So if we can get involved in those sell positions as soon as price is tapped into our POIs, then we can look to profit on some great positions. So looking here at the euro US dollar, we can see how price has been predominantly bearish, producing us with lower highs and lower lows. That's great. What we have seen as of recent though is actually a break in this, or definitely a disturbance. So we saw a low get created here. We then saw a lower high get created. Now this should have led price to then go on to create a new lower low, but it actually didn't. In fact, it has actually created a higher low, which is our first suggestion of a potential reversal in price. Now we are looking at this on the 1-day time frame. So if this is something we can capitalize on and get involved in as a higher time frame potential buy, let's say, we could be looking at some crazy returns. So we had a 4-hour break of structure here. That's, a good piece of confluence for us. We then saw price distribute here, taking us lower. This low was held. Now what we want to see, or what I want to see in order to look for those buy positions, if I just get my brush, is actually see price come up, completely break this high that was set. This would then confirm bullishness on the 1-day time frame, which is amazing. Then what we want is to see some kind of pullback into an area, a point of interest that we need to see price penetrate. Once we have that, and then confirmation of, its next impulse taking us higher, that is when we will look to take advantage of those buy positions. And I want to have my take profit set somewhere around here. Now, before I move over to the Great British Pound CAD, what does this mean for this pair and how can we look to get involved shorter term? Well, we could actually look to go down to the fractal structure and actually look for those buy positions to take us above these highs here, breaking that structure. And then as soon as we see signs of price reversing, that is when we would look to close and then wait for that next initial buy to take us into our point of interest. So if you are wanting to get involved in the EUR USD, maybe look for buy positions come Monday. Obviously, ensure that you have the right analysis done and some good pieces of confluence and confirmation before you actually execute a position. But those are my thoughts for this market, and that is where I believe price will take us in the coming months. Now moving over to the Great British Pound CAD pair, we can see here how we've actually had a 1 week break of structure. This is major in the grand scheme of things, as this does suggest further bearishness moving forward. So it would be great to be able to capitalize on some sell positions. But obviously, before that happens, we're going to have to see some kind of pullback. So what we want to do is obviously be involved in those buys. Yes, we are trading against the trend if we were to buy into this market. But as we can see, it is on a 1 week time frame. So we aren't scarce to know, get caught out on sharp reversals or anything like that. So what we would need first and foremost is a break in this structure here on the higher time frames. So if we have a break in this high, this would in fact confirm bullishness on the 1 week time frame, which again is major. So what we'd look for is a break above that, price to come down, tap into a POI, and then start to take us higher, trading us up, eventually trading us up into our point of interest, then show signs of a distribution or some kind of reversal, and then that is when we can look to get involved in those sell positions longer term, and we can obviously hold that. So again, how can we get involved in this as an intraday trader and before this initial break? Well, what I've done is I've actually found and highlighted some areas where I'd like to see price come down to before taking us higher. So looking here on the 1 hour time frame, we can see how we've actually had a break in structure to the downsides. This confirms bearishness moving forward, and as you can see here, I've highlighted 2 points of interest. So I'd love to see price come down, tap us in to one of these, and then start to take us higher, trade us higher than these highs here that have been created. Again, price could actually tap into the lower one, and we could, this would actually give us more room to profit. As soon as price has tapped in, showed signs of rejection, we would look fractally to ensure that we have the right confirmation and confluence in order to buy into this market. Once we had that, say that it traded from here, our stop loss just below our POI, and then our take profit could even be at these swing highs here. That would be a lovely trade to place. As you can see, brilliant returns, a 1 to 21 RR. We're looking at some crazy returns there, crazy profits. And then moving forward, we would then want to see price continue to trade us up, and we can look to add in on those buy positions into our higher time frame at point of interest before we look for those sell positions longer term. Now that does come to the end of my section. Again, it may seem like it's all over the place. I have not really gone into too great of a detail with my analysis. I've just kind of given you my overall bias, whether I'm looking to buy or sell into these markets, what my higher time frame bias is, and the direction I want to see the market trade in, and then also giving you some kind of idea on how we could look to tackle the markets, as an intraday trader. I've not gone too in depth, but I feel like I've provided enough information. If you have enjoyed my section of the video, then great. Please leave it a thumbs up. If you have any feedback about what I've gone through today, if your bias is different, if you've got anything you'd like to share, by all means, leave it in the comments below. Now, what I'm going to do is pass you over to James. And as I said, he's going to run through his analysis, give you his bias. And I hope you can find some valuable information from his video and take it forward into your trading week. Thank you guys for listening, and I'll pass you over now.
Hey everybody, hope we're all doing well. Hope you've enjoyed the analysis that Luke's provided. I'm going to start off on the euro to US dollar here. I say this every time, but this is the main market I look to trade. I just find it's the most volatile, and to be honest, I just have an understanding of what I want this market to do, shorter, medium and longer term. So I just stick to what I'm familiar with, understand how I'm going to trade that on a daily basis, and if there's a day where it's not following a bias, then I simply just won't trade it. Greed is honestly the last thing we want inside of our psychology. So avoiding trying to just trade every single day if the market isn't delivering us the price action we want to see. Just wait until these moves deliver and then we'll look to trade those. But anyways, jumping straight in. As of recent, we see that price had this push down and we seem to have accumulated in this region. We'll dive into that and how we're tackling that shorter term. Of course, however, though, looking at this longer term, we had this impulse up and I was hoping that potentially what's going to happen here is we were going to pull back into a demand zone before making that next move higher. It seems that what has actually happened is we have made a move lower, protected that low, but we haven't done so in the best of ways. All we seem to have done is create more liquidity at this region. There was no clear demand zone in my eyes, so there's no clear tap and mitigation, rather just the creation of more liquidity. So I'm probably going to see this as the start of a move lower, and therefore we're going to need to trade back up and mitigate one of these supply zones before then making that move lower. So the bias from here is to buy up into one of these supply zones before hopefully finding a reversal and a sell to the downside. So that is the bias we are working under as we move forward. Moving on to the 15-minute, this is just the accumulation I marked up. The second we had the displacement, that is when I identified these two demand zones. And on the Friday, so yesterday, what was happening is we saw price slowly trading back down. And when I came to look at the market, I was looking for any potential opportunities where we could just sell down into this zone. We had a successful one in this region. These were the two supply zones I was watching. And if we dive into this one slightly more, we'll have to go back. We see a nice example here of inducement and momentum. Thankfully, what actually happened is I got involved here, which was a 5-second distribution. We see that after the displacement, that is when I entered, but we ended up consolidating for a long period of time. What we did is we induced a lot of sellers into the market before then introducing that momentum through this high volume buy to sell. Thankfully, I had a lenient stop loss, which meant that this trade wasn't stopped out. But the fact of the matter is that after this, after the inducement has happened, the momentum's been injected. Obviously, we know for momentum to be injected, there has to be institutional control. That is what has happened. Straight after that, we have a large sell position that they've executed, evident by the fact that we have a heavy push down afterwards. So moving forward, if we were to have continued bearish, I would have been seeing this as a supply zone. However, we understand that we're only selling into this demand zone to continue our longer term bias, which was for price to trade down into this, accumulate, and then start going higher into one of the higher time frame supply zones. So after we had the mitigation and then displacement of the fractal high, I was actually just showing this to a client I was in a call with, how we could have looked to tackle this market. I was saying that after we had this displacement, whether it be this high or this high, we've pushed up, and then looking inside of this is our first bullish impulsive wave. Where would we like to see mitigated? To me, there was a nice zone here. I actually ran over with the client why this was the valid zone to me, but this was the zone we tapped. We could have either A, got involved the second we had a displacement, which would have been here on this wick, which would have looked something a little bit like this. Stop loss just below the zone. Take profit up at that supply zone we were looking at. If not, when price started taking off again, we had another region that was the only unmitigated region in this market. So after we had an accumulation here, a continuation higher, we could have got involved on the tap of this zone, which if it was to play out, 2 pip stop loss provides us with a 76 to 1 or a 176 trade. Even if we refine that stop even tighter, you know, we could be upwards or close to that 100 to 1. But of course, we always want to be lenient with that stop in case we have liquidity sweeps, which I believe we actually did do with this zone. If I move this out of the way, we see a slight wick, which comes to sweep the liquidity, and therefore that is why we need that more lenient stop moving forward. So after all that happened, after we accumulated in this overall demand zone, we started breaking structure to the upside. I'm going to assume that price is now going to continue trading as higher, go to a slightly higher time frame. I'm going to assume, yeah, that we just continue trading bullish now all the way up into at least this zone, if not the zone higher. Therefore, getting involved in buy positions this next trading week, in my eyes, is the logical thing to do. That seems to be what the bias is giving to us on this market. So if we look inside of this region, is there anywhere that we can see any unmitigated zones? I'm going to refine these, but just off the top of my head, that looks nice as a demand zone, and also somewhere inside of here. So those are the two regions I'd be looking at. Let's go to a 15-second to see if we can confirm their validity. I'm liking the look of this one. No clear mitigation of that prior, and then it's going to be this candle right here, I believe, for us that we want mitigating. So those are my two zones moving forward. I'm going to place some alerts on those, wait to see if price taps us in and gives us some entry confirmation, and if so, I will then be looking to go long, as stated, to those supply zones higher. I'll be taking partials along the way at any major structural points, but there is potential there for a nice movement. If we just draw that out quickly, we zoom out, get this tool, we see that it is 130 pips away for the lower of the two zones, so there's a nice bit of room there to be getting involved in buy position. So if you can find a way to do so, that's definitely what I would recommend. Now, coming back onto the US dollar yen, again, this was the other market I included in my Sunday sessions the last week. I was looking to potentially buy from this zone. We see that price did pull us all the way back down. However, we didn't get a full tap of the zone. You see, it just didn't quite hit my alert before then making this move higher. The hard thing is at the moment is we don't have a clear bias on this market. You know, from here, people were asking me, oh, does it seem like it's reversing? Are we going to get involved in sales? I said, until we have clear displacements of this market, I will not be getting involved short, just because this is massively a buyer's market. And at any point, we can just have this crazy volume introduced to the upside. Obviously, as we said, this seems like, okay, supply's entering the market. We have a nice move down. Supply seems to be dominant. Next thing we know, we have this sharp shot up, indicating that no, there is still plenty of demand remaining in this market, and therefore I believe getting involved in sales isn't the wisest of moves at the moment. We're just going to be continuing to look for longer term ways to get involved in buys, which is unfortunate that we weren't able to get involved on this tap, because it would have been a brilliant buy position to take. Just seeing that we would have been able to capitalize on 400 pips within one day. So definitely crazy potential if you do manage to get involved on the buy positions on this market. It is tough, definitely a market condition that isn't easy to trade. However, if you are able to get involved in those positions, then the volatility we can experience, and therefore the returns, we can make crazy amounts of profit. So just keep your eye on this. Again, don't be fooled when we start getting those lower time frame displacements that we're going to go short. We are still massively within a buyer's market. We are still within an overall mark up. And until this major swing low is broken, which is probably thousands of pips away, yeah, just under 1,000 pips away, I will not be looking to go short. So that is my bias on this market. It's also going to conclude my section. As stated, these are the two markets I pretty much only trade. Every now and then I will take a look at another one, but I just prefer to stick to these, stick to what I'm familiar with, and understand their daily movements. If you would like updates on this analysis, make sure you are involved with the LAGFX Learning Lounge. Of course, we update this analysis all the time in there, as well as providing you updates with fundamental news, any business updates that's relevant to LAGFX. If you're not involved, definitely recommend doing so. But with that being said, thank you for watching the video, and we'll see you next week in the next Sunday sessions.